Hello everyone, thank you very much for tuning in. In this video, I want to talk about a company that's so big, probably one can call them as a mini government in itself, considering the amount of money they're making every year. That's none other than Reliance Industries. Reliance is the number one company in India if you take a look at their market capitalization and revenue is concerned. And it just keeps growing year on year on such a large revenue base. It's just staggering to see how the company managed to reinvent themselves over many decades and stay relevant in such a changing time. The right metaphor for Reliance Industries could be, it's the size of an elephant but can move with an agility of a rabbit. I know some of you may be wondering why talk about Reliance Industries now, because it's such a big company, many of us know what they do at a broader level. In this video, I want to talk about why I think Reliance Industries could be a good investment, what are the strategies they're adopting that could potentially pave way for the next wave of growth for the company in the next, if you look forward henceforth, maybe in the next 5 years or 7 years time frame. Before diving in deep, let's get the disclaimer out of the way. Whatever the analysis that I do, please don't invest in them blindly. I might have my own biases and trading positions, and I might be wrong in my analysis as well. So please take it with a pinch of salt, and if you don't agree with my analysis, please let me know in the comment section below. And if you do like what I'm saying, please don't forget to like, share and subscribe. First things first, let's take a quick look at the businesses that the company is into and also understand some of the financial ratios and the financial metrics that the company is having at the moment. This is broadly to understand what are the risks that the company is having from the investment point of view. So what's the business? Reliance is a conglomerate company and has businesses starting from petrochemicals to media to retail to telecom that we all use in our day-to-day lives. In petrochemicals and refining, Reliance is one of the largest producer of polyester fiber and yarn in the world. And it also produces a lot of petrochemical products starting from polyethylene, PVC and many more. And on the second business that they have is telecom and digital services. Jio, we all know, we all use it in day-to-day basis. The company has been very clear in the strategy since the time they launched Jio. They want to position Jio as more of a digital services company than just a telecommunications company. Then the third vertical of the business, which is a retail business in Reliance Retail, they operate one of the largest offline retail chains in India under Reliance Retail, and include the range of businesses starting from grocery stores to consumer electronics to fashion and lifestyle, and some of the recent acquisitions that we have seen starting from Metro Wholesale to Zivame and everything, and Ajio is one of the fashion retail e-commerce marketplace. So all comes under Reliance Retail gamut. The other verticals are broadly in the lines of media and entertainment. And in media and entertainment, the company owns channels like Network 18, Colors, Woot, and etc., which are all part of Reliance Industries. And as you can see from the revenue point of view, the company it's a giant company. I mean, if you look at the recent annual report, the company is making close to 8 lakh crores, and with a net profit of almost 67,000 crores in annually. If you take a quick look at their P&L statement and try to understand the kind of growth that they have seen in their revenue is concerned and operating profit and profits are concerned over a period of many years, the sales growth has been consistent. The company is growing at almost close to 7 to 10% depending on the time frame that you're looking at. The profit growth is also pretty good. If you take a look at any time frame, say last 12 months to 3 years to 5 years to 10 years, it's anywhere between in the range of 10 to 14-15%. And if you take a quick look at the other metrics as well, starting from ROCE to ROE, return on capital employed and return on equity, the company is doing reasonably well. And by the way, if you don't understand some of these metrics, I've covered in my previous video, please have a look at it and I'll put it in the video description below. But the only concern for one could be the debt that the company is piling up over the last few years. And it's staying consistent around 3 lakh crores, but 3 lakh crores looks like a very big number. But if you consider the amount of revenue that the company is making, which is close to 8 lakh crores, and the net profit of almost $10 billion, which is 67 to 70,000 crores. And if you take a look at some of the debt related metrics, starting from current ratio to interest coverage ratio, they look pretty acceptable. So if even in the interest coverage ratio, which I've covered in one of my previous videos, again, it's close to 6. Whatever the debt that the company has in their books, they could easily service the debt from the cash flows that they have. So there are no complaints over there, but so just a small concern in terms of the amount of debt that they have piled up, considering that the interest rates are not what they were few years ago. It's highly likely that the interest payment for the company will go up. This one is slightly negative for the company, if one may call it. So no doubt about the company in terms of their business is concerned. The company is a massive giant, as you can see, and one can be a bear on this company only if you think India as a country is not going to do well economically. Otherwise, Reliance can be easily considered as a proxy for India's growth, considering the number of businesses that they are deeply embedded into India's growth story. Coming to the last section of my video, which is my favorite part. Why do I think Reliance is a stock to watch out for in the next 1, 2 years, 3 years time frame? And if you're looking for a stock which can outperform Nifty and also have that safety net comfort for your investment, then this may be the stock that you want to look out for. Why do I think that? So number one reason I think is the stock performance. If you take a quick look at the stock price performance in the last few years, Reliance has a stock which has not given any returns in maybe last 1.5 2 years time frame, which is in line with Nifty. Reliance has a stock that could most probably can mirror Nifty and maybe outperform Nifty in some years. But in the last maybe 1.5 2 years, it has not done much. Which is the case with Nifty as well. But if you look at especially in the last 6 months or so, or 6 to 8 months, 9 months or so, the stock has been underperforming Nifty at a massive level. So if you look at Nifty in the last since September, August 2022 onwards, the Nifty has done about close to flat, maybe 1% plus, and the stock is down, given minus 10% return. So my point here is that you're getting a stock that is very good at a reasonable price, which is underperformed Nifty. And the second point that I want to make is the strategy of the company. The company has made a bunch of acquisitions in the last few years, which has made them inorganically grow massively and made their presence felt in different parts of the business. And if you take a quick look at the Reliance retail vertical, the kind of acquisitions that the company has made, starting from the recent Metro acquisition, Metro wholesale acquisition, to Campa-Cola, where they want to enter into carbonated beverages, competing with Coca-Cola and Pepsi. And the tech adoption that they are imbibing with JioMart, if you want to order something on the groceries front, you can do it with WhatsApp, which they have done reasonably well by acquiring some of the companies like Haptic on the consumer engagement side. And if you take a look at some of the brands that they've acquired, starting from Zivame to Netmeds to Metro, we already covered, and Purple Panda Fashions, Clovia. These are all the acquisitions that give them boost to the B2C/D2C direct to commerce segment. Adding on to this, Reliance recently launched Tira, a beauty retail, and also there are rumors about them launching online beauty portal in competing with Nykaa. They literally want to be the king of retail in India, not only offline but also on online space. If you take a look in the future and think who could be the organized players for the massive country like in India, there could be Reliance Retail, and there could be D-Mart, and there could be maybe a Trent, which is your Star Bazaar, and there could be 1 or 2 here and there. For such a large country like in India, you have maybe 5 or 7 players, or maybe less than that, and Reliance and D-Mart and Trent may be dominating majority of the market share in the organized retail space in India. India, by the way, most of the retail is still unorganized. So there is a massive growth potential that's there for all these companies in the organized retail space, and Reliance having one foot in the offline retail space through Reliance Retail, and another foot in the online retail space with a bunch of acquisitions they made on the brand side, starting from Zivame and etc. So the opportunities for the retail business to grow in the next 5 years is still, there's lots and lots of headroom that's there, and with few players being dominating this space, Reliance could be up there in number 1 or number 2. And the third thing is IPL rights. Reliance has paid huge sums of money to buy IPL digital rights for the next 5 years. They paid almost 25,000 crores and to telecast IPL digitally for the next 5 years. And clearly, Reliance, by acquiring the digital rights, they're trying to be the big daddy of IPL as well. How is it going to help Reliance? One, they own Jio, which is almost worth, if you take an valuation perspective, it's almost worth $50 to $60 billion, and they supply internet data, which is the infrastructure to watch the IPL. And second thing, they also own Jio Cinema, which is touching nearly 100 million people, more than 100 million people in India, and it streams IPL, which is helping them massively on the distribution front. The third thing, on the advertising revenue. the kind of vertical integration that the company can be beneficial with IPL rights can be a very big boon for the company for the next few years. If we just take a step back and understand the strategy of Reliance here, with the kind of acquisitions that they made and the kind of inorganic growth that they're seeing, it reminds me of one thing. In an ocean, there are a lot of living creatures that are there, starting from fishes to a lot of other living creatures that are there, but there are only few sharks that are there. And what do sharks and whales do when they don't have enough food? They eat other small fishes and other living creatures, which is what Reliance is doing with their inorganic growth. And the kind of acquisitions that the company is making start on the Reliance retail side with all the brands that they have acquired. It looks like a perfect analogy what I've just made. Okay, I'm not trying to say that Reliance business practices is good or bad, because it's just the nature of the market sometimes. And frankly, from an investment point of view, it doesn't matter. I mean, companies like Reliance, if they're doing what they're doing, it's actually good for the investment because there's no one that can question them. Okay, the last point that I want to talk about is the value unlocking that the company is going to see by delisting some of their businesses. We already have seen what happened with Adani. Adani Enterprises as a company, if you look at it, it was again one of the big conglomerates, and they delisted a lot of their businesses, starting from Adani Ports to Adani Power, Adani Transmission, Adani Green, etc. And how the company stock prices have risen after that. It's a different story now after the Hindenburg research report. Leaving that aside, what Reliance could do in the future, already in the last financial meet, the companies announced the delisting of Jio Financial Services and listing it as a separate entity. That again is a very big boon for the company. In future, if you look at all these companies that that Reliance has, starting from Reliance Retail to Jio as a company, these companies are already very big, and they're going to become even bigger in the next few years, and they have to eventually list them as separate entities, and that eventually will unlock a lot of value and hopefully create a lot of shareholders wealth as well. These are some of the reasons why I think Reliance could be the stock to watch out for in the next few years. With that, I'd like to conclude this video. Thank you very much for watching. Please let me in the comment section below whatever the feedback that you have, and if you do like the video, please like, share and subscribe.